today. And I'm glad to be your host today. My name is Dave Chong, and I'm the Group Vice President for IQI. So let me start my screen sharing here. I want to use my slide. Let me start here. Okay. Can everyone see the slide? If you can see the slide, can you write number 3? Yes, you can see the slide, right? Okay, good. I see people can see my slide right now. So welcome to our talk today. Like I say, my name is Dave Chong. Today topics will be property investment through OPM, other people's money. And before I start, let me give you a brief introduction about myself. Okay. I'm the Group Vice President for IQI Holdings, and I'm the founder of Eliteone team in IQI. IQI is a real estate company that do a lot of both international projects, properties, and also local properties. So I graduated from Imperial College London. I studied Master of Engineering, and I'm quite blessed that I got a first class honor when I graduated back in the old days. That was 12 years ago, 2008. So Imperial College is in London, in the UK, and it's one of the top engineering school in the world. It's a top engineering school in UK, and number 3 or number 4 in the world. So I'm quite lucky I was able to attend the school over there. And then I worked in the UK in an oil and gas company for 2 years after I graduated. So this is a photo that we took in an international company. So I'm a structural engineer in the company. So we design steel pipe racks that support the oil refineries. Okay, so this is an international team. If you look at this photo, it's really international. You have people from China, from Sudan, from Iraq, from Russia, from France, from Spain, and of course from China and Hong Kong. So I used to work in an international environment. So in 2010, I decided to come back to Malaysia, okay, to start my own business. So this was the first business that I started, bird nest trading. Have you seen bird nest before? The raw one? So actually, I collect this nest from this nest farmer, clean it, and actually sell it to China. So that was back in 2010. So this is my bird house. So for those who do not know, bird nest is a kind of Chinese delicacy, and it's very, very good for the skin. So women actually love it. And actually, I tested it before. If you eat it every single day, your skin will become very vibrant, very smooth. And when you wake up in the morning, you look at the mirror, you say, today, not bad. Skin is nice. So if you have not tried, try it. So these are the birdlings that we have in the house. So we do not kill the birds. We actually give them a space to stay. So, and then they will make a nest. Okay. Once they actually grew up, they do not need the nest anymore. So we will harvest the nest. So this is my team. This is my team back in the old days. I started a company in China also. This was in Ningbo, near Shanghai. And then I started a trading company in 2013. And this is my warehouse. The business is still running. So I'm actually a business owner. I own a few businesses, and IQI is one of my business. And in 2014, I actually joined IQI. So every single week, we'll conduct a property investment training in not just in property, but in many areas of businesses as well. So we actually want to encourage people to learn and to transform their own lives through personal development and also financial success. Okay, so that's a brief introduction about myself. And let's go into the main topic for today. So there are 5 parts that I would like to cover for those who would like to learn. First during this crisis, a lot of people are saying, oh, okay, economy is no good, do not buy properties. And because there's a property bubble coming in. Is that truth or is that a myth? So we'll look at it later. And second, we'll talk about stocks and also properties. So people are saying, the stock market is actually collapsing right now. A lot of cheap views. So should you invest in stocks or should you take your money and invest in properties? So we look at some of the data that we have on hand, and I'll show you and I'll analyze it. Which one is better? Okay, stocks is better or property is better? Okay, and then we talk about the concept of OPM, which is other people's money. And why is this concept so important in property investment? We'll look through that later. And what is your investment strategy in 2020? If I have cash in my bank account right now, where should I put it? Okay. So, okay. And finally, we'll talk about a project, but one of the very top developer in town. And how do we choose a good property? What criteria should we look at when we want to invest in property? We'll touch on that also. All right. So before I officially start, I want to say every cloud has a silver lining and every crisis lies an opportunity. So during this period of time, do not despair, because the world has already shown many, many times, after every single crisis, good things will come. All right. So be hopeful and the world will be better. All right, so far so good. If you are okay, give me a 5. I know you are still there listening. Thank you, Jonathan. All right, so the first one, are we really in property bubble? Okay, so first, let's talk about property bubble. How do you define property bubble? So this is an article that I took from the internet, from a website called Investopedia. Okay, Investopedia talk about investment. So they say, okay, when the demand decreases, stagnates, at the same time supply increases, resulting in a sharp drop in price, then the bubble bursts. So this is called property bubble. So there are 3 things. 1, demand decreases. Second, the supply increases and sharp drop in price. So whether that is happening right now or not, we'll look at it. Okay, 3 things. First, we look at our history of the property market. So this is a year-on-year increase in property price for Malaysia, in Malaysia. Okay, if you look at the normal time, okay, the normal time, which is 2001 to 2009, the property price average increased about 3.2% per year. Okay, but after the crisis, if you look at here, 2009 was a financial crisis. Okay, and suddenly it shot up to 9%, 9.6% for the past, from 2010 and 2014. Okay, of course now it has already gone back down a bit. Now it's about 2 to 3% for the past 2 years, 2008, 2009, and this year we foresee about 2%. Okay, so we are not in the negative yet. Okay, and we will not be in the negative anytime soon. This is a data that I got from NAPIC. Okay, this is a government website. This is the average Malaysia house prices, okay, for since 2008. This is the average price that we take into consideration of all the areas in Malaysia, not just in Kuala Lumpur. Okay, so 2008 to 2018, the property price has been increasing. Oops, let me stop some of the audio over here. All right, okay, I muted the other person. Okay, so if you look at this, this is actually very healthy. For Malaysia property prices, for the past like 50 years, 20 to 50 years, it has been very healthy. It was going up slowly, and it never had a very sharp drop. Okay, So the first thing that we were talking about just now is demand. So is there a demand for property in Malaysia? Okay, when we talk about demand, there's one thing that we need to look into, which is the population. So right now we are 2020, we are in the 32 million range of population in Malaysia. And this is a graph that also I actually got from Department of Statistics Malaysia. Our population is growing actually at a very fast pace. In the next 10 to 20 years, okay, it will reach 40 million. So the demand for property is definitely going to be there, because when the population increase, definitely they need a place to stay, okay? Especially now for the younger generation, they do not want to stay with the parents. Do you agree with me? They do not want to stay with the parents. So if you agree with me, give me a 6. If your kids, your children do not want to stay with you, give me a 6. Yeah. So especially now, those who are younger than 20 right now, in the next 10 years, they're going to be getting married. And once they get married, they want to move out. When they move out, they either rent or they want to buy. Okay, so definitely there's a demand for property over there. Okay, so now let's look at Malaysia demographics. Malaysia is a considerably young country, okay? Meaning our population, if you look at this, 67% is younger than 39 years old. And if you look at the younger than 14 years old is 26%. Okay, 15 to 25 years old is 21%. So it's almost half the entire population is young population, meaning younger than 25 years old. So when this population grow up, they will become financially capable. And when they become financially capable, they will want to invest in property, okay, be it in project or in sub-sales. So right now, if we do not buy, okay, property price is going to go up and go up and go up. So in the future, for your children, if they want to stay in good location, for example, near the city center or in Petaling Jaya or in PJ, the property price is going to be very high 10 years later. So some of my clients, some of my buyers, actually, they actually invest the property for the children, for the future of their children. Okay, so let's look at the supply also. Okay, this is the current stock for houses. This is all inclusive, landed and condo together in Malaysia. So current, we have 5.6 million houses. Okay, and the incoming supply is 400,000. Planned supply is 400,000. So we have around 7 million houses available in the next 5 years for Malaysia. But if you study the population growth, we are not enough. We do not have enough properties for everyone to stay. Okay, taking into consideration one household have 2 to 3 people staying. Currently, the stock is not enough. So our supply is not much more higher than the demand. In fact, the demand is actually much higher. Okay, just that we need to look at the hotspots. Okay, this is taking into consideration of the entire Malaysia population and the entire Malaysia houses. So later I'll show you, of course, some of the area is less in demand, some of the area is more in demand. Okay, then the next thing, when we talk about property bubble, we also need to look into the household income. So this is the numbers that I got from the Malaysian government. Okay, our mean household income for the T20 group. So when we talk about household income, there are 3 groups in Malaysia. Now, that's how we categorize. We have the T20 group with the M40 group, and then we have the B40 group. The B40 is a lower income, M40 is a middle income, T20 is slightly higher income. So for a lot of the people in PJ, okay, PJ, they are higher, their income is higher than the average in Malaysia, okay, in Klang Valley. So mean household income is 16,000. This is like 4 years ago. This is 2016. now is even higher, 16,000. And this is the average in all the states in Malaysia. Okay, so if we look at the green bubble on the right-hand side, in Kuala Lumpur and also in Selangor, the mean household income is actually higher. So people of course in Selangor, in PJ, and also in Kuala Lumpur, their income is higher. So the mean, okay, so the average is 21,000. Okay, so when we talk about property bubble, there's one ratio that we really need to study, okay, and that is called the property price to the income ratio. So how do we calculate that? We take the property price, divide by the household income per year, and then we will get a number. Okay, we get a number. That number is called the ratio. Okay, so let's do a calculation together. Okay, in Klang Valley, one household income, this is 7 years back, is about 14,000. Meaning, let's say the husband is getting 10,000 and the wife is getting 4,000 plus. So this, when you combine together, that's 14,000. Okay, the household income. So you take this income times 12, that's the yearly income, which is 174,000. And then you take an average property price in KL right now for, let's say, a 2 bedrooms and also a 3 bedrooms, that's about 700,000. Okay, do you agree with me? 700,000 in PJ or in Klang Valley, slightly good, okay, property that people would like to stay. Right now, if you want to buy, it's about 700,000. So you take 700,000 divided by 174, you get a number. That's 4. Meaning that this household, if they save all their income, okay, if they do not eat, they do not spend, 4 years they will be able to buy this property without getting a loan. Okay, so this is a very important number to gauge whether the property in a certain area is overpriced or undervalued. Okay, so in KL, in Klang Valley, it is 4. So let's look at our neighbors. Okay, so this is the data that I got from the internet. If you look at Hong Kong, Singapore, Thailand, Myanmar, Philippines, Vietnam, Cambodia, Indonesia, what is the ratio? You can look at the property value to income ratio for Hong Kong is 41. Singapore is 24, Thailand is 23, Myanmar is 94. And all these countries, okay, our neighbors, they are double digits. Double digits. I haven't taken the Taiwan, Korea, and also Japan. That's also double digits. In Japan, it's cross generation, meaning if you get a loan, you have to service the loan. Your kid have to service the loan, and your grandchildren need to service the loan also. So cross generation. But in Malaysia, we are actually very blessed, single digit. Okay, single digit only. So our property price is relatively cheap, okay, compared to our neighbors. If you look at any other countries in the world, this number will be a lot higher. So when we say property bubble is coming, actually, I don't really think so, because our property price is so cheap, okay, in the global sense. Okay, so far, okay, are you getting this concept of property price to income ratio? You can do your own calculation. Okay, if you are okay, give me an 8. I like number 8. In Chinese, it's fa. Okay, means prosperity. So for all the property owners in Malaysia, congratulations. We are still buying very, very cheap properties right now compared to a lot of my friends in other countries. You know, in Hong Kong, their normal condo, 500 square feet, will cost about 10 millions, you know, ringgit Malaysia. That's absolutely crazy. Their income is not like 100 times more than us. Their income is like 3 to 4 times more than us, but their property price is more than 10 times. Yeah, 10 million. If you have any Hong Kong friends, okay, you just ask them, in a decent place in Hong Kong, that will cost a lot of money. Okay, I actually converted into ringgit. Okay, if you search online, you'll get in US dollar. Just convert it into yeah, KC. About 3-4 times. I asked my friends. He's an engineer in Hong Kong, a graduate. So they're getting about 20 to 30,000 Hong Kong dollars per month. That's about how much? 20,000. There's 10,000. 10,000. So about 3 to 4 times more than us for their income. But their cost of living is like 10 times more than us. All right. So, okay, the second question is that a lot of people are allowed to ask me right now. Hey, the shares is very cheap right now. Should I buy shares? Okay, let's look at some of the crises that happens in the world. So look at this. This is the US share market index. So if you look at all the red numbers, is all the economic crisis. Okay, the Great Depression in the 1930s, World War II, okay, and then oil crisis, Black Monday, dot-com bubble, which is the recent one, and then the financial global crisis, which has happened just recently, 10 years ago, in 28 and 29. So every single time, without fail, after the crisis, the share market will jump back up. Okay, if you look at my cursor, after the Great Depression, it jumped back up. After World War II, it jumped back up. Okay, after the oil crisis, it jumped back up. After the dot-com bubble, it jumped back up. So without fail, every about 10 to 15 years, this will happen. It's a cycle. Okay, so right now, 2020, okay, it has already dropped like almost like 30 to 40% for the share market. Is it a good time to go in? Okay, we'll discuss about that later. And then if you look at the property price index, it always follows the share markets. Okay, so if you look at the Black Monday, actually come down, dot-com bubble went down. Okay, and the global financial crisis, which is in 2008, that's due to the subprime mortgage in the United States. That's why the property market was affected a lot, okay, in their country. I still remember that time I was in London. I was working in London, and the property price actually dropped down a lot of lelong, okay, a lot of foreclosure. And if people, okay, dare to go in at that time, actually they make a lot of money. Within like 2 to 3 years, the entire market actually came back to normal, okay? And sometimes you can get property at half the price. Okay, so look at Malaysia. Malaysia also the same, very similar. The share price actually peaked before the Asian financial crisis. That was in 1997, and then it dropped, and then it come back up. SARS, it dropped, it came back up. Global financial crisis dropped, and then it came back up. So in a very short period of time, it actually came back. So people who managed to grab some of the good deals during the low of the index, the lowest point of the index, or even you don't need to go to the lowest point, it's around here, you'll be able to make some money. Okay, make some money. Someone asked me, what goes up will go down, what goes down will go up. Get in when property market go down. Yes, correct. Okay, that's a very correct concept. So right now, if you look at Malaysia, it's here. Okay, because of the trade war and because of the coronavirus, it's here right now. So yeah, it's a good time to go in. And this one is the property index for Malaysia. So in Malaysia, if you look at it, the property price is actually very steady, regardless of whatever crisis. Beside the Asian financial crisis, it's actually quite a flat line, you know. I mean, even during the dot-com bubble, the global financial crisis, the debt crisis, it come down a bit, but very fast it actually went back up. So property is a very, very stable asset to hedge against inflation and also economic crisis in Malaysia. Okay, why? Because our property price is still very reasonably low. That's why it's not like the US or Japan where it's like the price is really sky high, where the normal income earner they cannot afford. But here in Malaysia, if you want to buy a property, Yes, most people still can afford to buy a property. Not in Japan, not in Taiwan, people cannot buy property anymore. Okay, let's compare share markets and the property index. Okay, so this is Singapore. So the red line is the share market, the blue line is a property index. So in Singapore, okay, the share outperform property. Okay, so if you invest in 1986, let's say you invest $1, so how much you get back if you invest in share market, invest in property? Okay, that's the comparison. Okay, in Canada, okay, so this is a Canadian stock market and Canadian property market. The top line, top blue line is the share market, and then the bottom line is the housing index. So similarly, okay, if you invest in the share market, it's actually better compared to property. Okay, for their countries. Of course, later you want to ask, then of course I buy share or buy property, but of course we need strategy. Okay, you cannot say I put all my money in shares, I put all my money in properties. No, we need a strategy. Okay, you see, property is relatively stable. Okay, relatively stable over there. So it doesn't fluctuate that much compared to the share market. Okay, this is UK and also the US. So UK and US is, you see the property and the share is about the same. Okay, you invest in share or invest in property is about the same, you get the same return. Sorry, in UK. Okay, this is India. You look at properties also, very steady. Of course, the shares also outperform the properties. And this is in Malaysia. Okay, this is Malaysia. So this is a slide I got from Dr. Victor Gunn. Yesterday he did a live. So actually snapshot his slides. If you look at this, during all the crises, property price remain very stable. Okay, very stable. So it doesn't fluctuate as much compared to the share market. So conclusion is, you want to buy property or buy share right now? Yeah. So let me share with you some of my thoughts. Okay. Now is the time that you need to keep your cash. Okay. If you want to spend on the share market, you need to use cash. But to buy property, you can use OPM. So you can combine this together. If you have spare cash, yes, go and buy shares. But in the same time, there are a lot of good deals out there in properties, then you can actually leverage on the bank. Okay, do not spend too much cash on property. Okay, you can always use the loan. I'll show you why. Okay, of course, but property price is very stable. So for people who want stability, okay, they do not want the roller coaster ride of going up and down with the share market, then invest in property. Okay. And the second point is property can leverage on OPM, and this is a very important concept. Third, property can be used for own stay. Okay, you have no place to stay, you can always stay in your own properties. And of course, we need to learn how to choose the right property, which we'll talk about later. So let me see. Oops. Okay. Now, for those who do not understand the concept of OPM, other people's money, let me ask you these questions. If you buy shares, okay, if you buy shares, can you go to the bank and say, give me a loan of 1 million. I want to buy shares. I pay you back 35 years in 35 years time by installment plan. Can you do that? If you say cannot, give me a 5. Yeah, I cannot. And if you want to invest in gold, okay, also, you won't be able to get a loan. Let's say you want to buy a 1 million worth of gold. and you go to the bank, you say, I want to buy gold bars, can you give me a loan? The bank will say no. They won't loan, they give you the loan. Investment plan or currency. None of this can actually leverage on OPM. Do you agree with me? Only properties, okay? You can go to the bank and say, I want to buy a property. Can you give me a 90% loan? And the bank is happily and willingly give the loan to you. Why is this so? Have you asked yourself these questions? Why is this so? For those who have answer, you can write your answer over there. Why as a bank, I give loan to property if as a collateral? I don't give loan to buy shares. Okay? Because Jonathan say, because it's stable and bank can encash the property as repayment. The bank can take back property and sell. Well, you can give them the gold bar as a collateral also, and then they can sell the gold bar. Okay, the answer to the questions is because the price is very stable, like what Jonathan said, the price is very steady and stable. So because property, you can see, you can touch, you can rent out, you can stay in there. The bank, which is very, they do not like to take a lot of risk. They feel safe to take property as a collateral to give you a loan. That's why property investment, okay, is very safe. Thank you, Jesse. Property appreciates most of the time. Yes, correct. The price, although sometimes it dip a bit, but it goes up slowly. Property is tangible too. Yes, you can touch. Okay, you can stay inside. That's why so many investors, they like to invest in the property, because it's a very safe investment that can hedge against inflation. Bad time like this, when your currency value drop, your property price will either keep at the same price or it will appreciate. So it's a very good way to hedge against inflation. And with property, you can, in Malaysia, we are very blessed, you can get 35 years loan tenure. You can get 90% margin for the first 2 residential properties. And right now, the interest rate is very, very low. It's less than 4% right now, okay? And for those who do not know, if you buy properties overseas, not a lot of countries are willing to give you 90% loan margin. 90% loan margin. In China, you want to buy property, sometimes you need to take like 50% down payment, okay? Cash down payment to buy a property, okay, for the second or third properties. In Hong Kong also, there's no such thing as rebates or discount or whatever. You need to take solid cash to buy property. But in Malaysia, we are actually very blessed. Okay, we have a lot of good things from the bank that can help us to buy properties. Okay, you look at the interest rate right now. This is the latest I got from the bank. Most of them, okay, is 3.85 right now. You know, about a few years ago when I buy property, my interest rate was like 4.5, 4.6, 4.7. Now it's only 3.85. Okay. And for some of you who already bought properties, congratulations also. Your loan installment has already been lowered. I just checked that day, some of my loan, they have already lowered down the installment. So that's why I would say it's actually a very good time to invest into properties because of all this. Okay, you do not need to take so much cash out, okay, to buy a property. Okay, what's the time right now? Oh, okay. So let me demonstrate what's the concept of OPM. Let's say I have one property in this year, 2020, I buy 800,000. I need to pay 10% down payment. Okay, so loan 720,000, repayment is 3,100. So let's say 10 years later, okay, 10 years later, the property price appreciates by 50%. Is it possible? I mean, 10 years appreciate by 50%. I think it's very possible. Who think it's possible? Give me a 9. 10 years, oh, not 1 year, no. In 10 years' time, it appreciates by 50%. Okay, and when you sell at 1.2 million. So you make a 400,000 profit. If you do a calculation on that, okay, your return on investment is actually 500%. Why? Because you only come up with 80,000. you didn't come out from your own pocket 800,000. You only come out with 80,000. Okay, assuming the loan interest was covered by your rental. Okay, I make an assumption. Okay, your loan interest is actually covered by your rental. And even if it doesn't cover 100%, you still have like 400%. I did a calculation yesterday or so. That is 50% per year. Okay, so let me ask you a question. Now, if you have 80,000 in the bank, do you want to put it into FD or you want to put it in property? Okay, if you put it in FD, it gives you 3%. I checked the bank today. Now, Maybank give you 2.8, Public Bank give you 3.1. That's the FD rate right now. They give you 3%. But if you put in a property, there is an opportunity for you to get a 50% return on your 80,000. Okay, when you sell it. Yep, of course, Jasmine, you are correct. I think it's subject to location and property to maintain in good condition. Yes, I agree with you. That's why we need to choose a property in a good location. In a good location. Like I myself, when I got back from UK 10 years ago, in 2010, I got back. I actually invested one condo in Mont Kiara, 10 years. And over this 10-year period, it was always rented out. Okay, because the location is very good. And then the condition is actually reasonably good because I ran to the expatriate. I ran to Japanese, and Japanese is actually very clean. So it took very good care of my properties, and I've been renting it non-stop for the past 10 years. I actually rented out, first I rented out 4,008, and now it's 4,003. So it reduced by 500 ringgit. Okay lah. My loan installment was only 2,005. So every month I actually have almost 2,000 ringgit positive cash flow from that investment. Okay, and that was 10 years ago. Okay, so right now, the investment strategy in 2020, I would say you need to be defensive and also at the same time aggressive. What do you mean by that? Defensive, you need to increase your cash capital. Okay, for those who have cash, do not simply spend it. Okay, go and look at the market, see what kind of good shares you can buy. Okay, there are a lot of good deals out there. So I'm not an expert to comment on this, but if you just look around, there are a lot of very good shares to buy right now at a very undervalued price. Okay, so don't use too much cash to buy non-liquid asset. Meaning, non-liquid asset means like property. Use minimal cash. So the strategy here is to leverage on the bank. Okay, use minimal cash to maximize profit. And aggressive maximum cash into liquid asset. For example, share right now. So later I'll share with you what kind of properties you can buy if you want to invest in property right now, which I think is actually a very good time to buy because of all the reasons that I just mentioned. Okay, so the next part is how to choose the right property. Okay, when you want to look at a property, you need to study a few things. One, the location. Location is always the most important thing when you want to look at property investment. Second, you need to look at the rental market for that property itself, whether it's easy to rent out or not. Okay. Third, you need to look at the product itself. Okay. Product also play a very important role in choosing the right property. Okay. Next is you need to look at the developer background if you're investing into project. Okay. Developer background is very important. Later I'll show you why. And of course, last, you need to look at the price. Okay. You look at price. Which area got better ROI? Okay, we'll go into that later. Which area? We'll talk about that. So the price, of course, you cannot be too expensive. And of course, you cannot be too low. Sometimes you buy very cheap properties also, you cannot sell in the future. Okay, today the project that I would like to talk about is this project by Exim, okay, in Oakland Road, called the Miller Square. So I'll take this project as an example, okay, to go through the 5 points that I talked about just now. Okay. First, location. this project is located near Mid Valley, okay, in Oakland Road. Okay, so we would like to talk about what is the center of gravity for location. So before I go into that, let's learn about population and city growth direction in Klang Valley itself. Okay, so this is some of the data that I got. Okay, so this is Kuala Lumpur. Kuala Lumpur, the density is 6,900 people staying in 1 kilometer square. Okay, it's the most dense city in Malaysia, also denser than Selangor. So population growth for the past 20 years actually increased by 25%. Okay, for KL. Why I need to talk about this? Because the demand for property actually relates to the population growth. More people in one area, there will be more demand for property. Do you agree with me? If you agree with me, give me a 7. Okay. Then we look at Selangor. So this is Selangor. If you look at all the other areas, the population is actually not so dense compared to KL. Okay. But Petaling is the densest. Okay. Most people staying in Petaling, which is 3,700 people staying in 1 kilometer square. And you look at the growth for the past 18 years, it actually grown by 53%. Remember just now Kuala Lumpur was 20%, now it's 53%. And within Petaling itself, the first part is Selangor, the entire Selangor. The second part is Petaling itself actually increased by 96%. Why? Why, you ask? Because nowadays, a lot of people actually move into Petaling Jaya. Like a lot of my friends from Penang, from Johor, from Terengganu, when they move to KL to work, they actually stay in PJ. They don't actually stay in KL. I mean, they don't stay near KLCC, but they stay in PJ. A lot of people stay in, like, for example, Oakland Road, okay, Bangsa South, or even SS15, SS2, Bandar Utama, all this area, people like to stay there. Okay, that's why the property price in Petaling have a lot of potential to grow. Okay, then we learn about the type of populations, demographics groups. First, we have one group of people, which is the local. Okay, for example, I myself stay in Sri Kembangan. My dad stay in Sri Kembangan. My granddad also stay in Sri Kembangan. So I'm a local. But people from the local will buy property in Sri Kembangan. Outsider won't really come into Sri Kembangan to buy a property to move in. Okay, so this kind of property is suitable for flipping. You know, property in Sri Kembangan actually appreciated a lot. Some of the houses, 100,000, like 10, 20 years ago, now it's selling like 800,000, 900,000. So suitable for flipping. Because why? My dad would want me to stay nearby. For those who have children, you want your children to stay nearby. So they will actually buy a property nearby and actually pass to the children. Second is a mobile population. What do you mean by mobile population? Meaning they do not stay in that area, but they actually work there. Okay, for example, KLCC. A lot of people work in KLCC, but they don't really are local. They actually are maybe from Penang or from other area, but they work there. So they need to buy a house or they need to rent a house over there. So this one, the property over in KLCC is suitable for keeping, okay, meaning to rent out. And this one will get very good rental return. For example, KLCC, Mont Kiara, this is suitable for the mobile population because expatriate, they like to stay in that area. So rental will be very good for mobile population, for mobile area. Okay, mobile area also include places like near a school, near a college, or near a university. For example, Sunway, Nilai, Setapak. Setapak have Tar College. So rental over there is very, very vibrant. You can actually always rent out your unit. Okay, and you have another one, it's called a move-in. Move-in, what do you mean by move-in? Means mobile plus local. Meaning people from Penang, they come here, they buy a house there, and then they get married there, and then they move in. Okay? So move-in is suitable for both. You can actually flip, and you can also keep. Meaning you can actually, capital appreciation is very fast, and rental is actually very good. So let me ask you a question now. If you want to invest in properties, which type would you choose? Can you write down your answer over there? Meaning not for own stay, for investment. Which type would you choose? Casey say move in. Yes, move in. Move in will be better for investment. Okay, so look at Selangor. The other area, they are all local. So like Ulu Langat, like Gombak, this is a local one. You won't purposely go and buy a property in Gombak for investment, or you won't purposely move to Gombak to stay over there. Okay, but Betaling is a move-in, so it combines both local and also mobile. Okay, you get this concept right? So this is a way to choose right properties. So let me demonstrate also the evolution of the city center. So normally when we started, when people gather in one area, we call it a CBD, Central Business District. When Central Business District, the property price become too high, people cannot afford, then people will move sideway. For example, KLCC become too expensive, people move to PJ. Okay, people move to Subang, Cheras, move to Hulu Langat or Klang. And then from the city itself, when that city becomes too expensive also, people move to the town. For example, people from PJ may come to Puchong, may come to Sri Kembangan, may go to Nilai, okay, may go to Subang, Subang Jaya. So this is how the city actually evolves. Okay, so when that happened, the city itself become a self-sustainable city. For example, in PJ or in Subang, you can actually get most of the things that you want. You don't need to go purposely to Kuala Lumpur, to KL to do your things. Last time when my Mother Day, okay, if you want to go shopping, I don't have a shopping mall around me. I have to go to KL. If I want to do some, let's say buy some computers, I also cannot buy here. I have to go to KL. But right now, you can buy in PJ, you can buy in Subang, no issue. So it becomes a self-sustainable city. Or I want to go to hospital. There's no hospital around me. I have to go to KL. But right now, there are many hospitals coming up. Okay, so this is a map of Klang Valley in the 1988. Okay, you look at the grayish area, that's a developed area. The green area is non-developed area. So Kuala Lumpur is actually the CBD. Okay, then it moved to the Mid Valley side or PJ side. It moved to Cheras. Then it grows. 1993. And then it moved to Subang. It moved to Shah Alam. It moved to Puchong. It moved to Serdang. It moved to Kajang. Then it grows. You see, this is the actual photo. I didn't Photoshop it. Then you go to Kota Damansara, go to Sunway City, Cyberjaya, Putrajaya, and all this city come out. Boom, it developed. So you see the trend. You see the trend. It's actually moving sideways and downwards. Why is not moving to the north? Because towards the north is all the mountains. You go to Genting side, it's all the mountains. So it's very difficult to develop property over there. So the trend is going south and also going west in property growth. Okay, this is 2018. Okay, this is 30 years before. You see how it moves and it grows. So this is how the city actually grows. Okay, and so now the center of gravity, okay, for Klang Valley is no longer in KLCC. It's actually right at Mid Valley side and Old Klang Road side. That's why it's called Mid Valley, middle of the valley. So from this point, you go to any site, it's actually very easy. It's very near. Later I'll show you. So our project that we are proposing today, we are talking about it today, is actually in Oak Lang Road. Let's look at some of the highways in nearby. So with the MP Highway, Max Highway, KL Seremban Highway, East West Highway, Vestraya Highway, Sprint Highway, Federal Highway. Okay, Mid Valley is over here. Okay, this is Mid Valley. Bangsa South is over here. Bandar Malaysia is on the right hand side, which the government just actually restarted the whole project. So it's going to be a transport hub for KL in the future. And high-speed train from Singapore is going to arrive here. And this is Oak Lang Road. And this is Miller Square. So from the map itself, okay, this is actually the actual map. I didn't draw it out of imagination. You see, from here, you can go many places. You can go many, many places through many, many highways. There are actually 7 highways connected to this place. Okay, and to buy a property, okay, the accessibility is very, very important, meaning people can easily access to that area. All right. Let me go to the next slide. Okay, and then you look at the bigger picture. Petaling Jaya is over here, KL is over here, Sri Petaling, Taman Desa, Subang Jaya, Puchong, Mahkota Cheras. They are all within 20 minutes drive. Okay, they are all within 20 minutes drive. Let me show you the Google map. So to Subang Jaya, 19 minutes. To Damansara Uptown, PJ, 17 minutes. To Jalan Awan Besar, this is Bukit Jalil, 11 minutes. To Kuala Lumpur City Centre, 12 minutes. Surprisingly, I actually drove from Oak Lang Road to KL City Centre, where the KLCC City Centre, it took me about 12 minutes only. And this is with jam. Okay, so the next thing we're going to talk about, the rental market. Okay, so how do you know whether that property is a good buy or not? You need to look at the rental market. Okay, let's look at this map. So you actually have all the offices around the area. Okay, you see you have Mid Valley, where there are a lot of multinational companies over there, a lot of big companies in Mid Valley. And then opposite Mid Valley right now, there's this Setia Eco City, which also a lot of big companies are starting to move in there. And then opposite Mid Valley, you have Bangsa South. That's a 66 acres of commercial development mixed with residential. A lot of offices over there also. And the next big thing is Bandar Malaysia. So when Bandar Malaysia is developed, there's going to be an influx of office worker over there. Okay. And Oak Lang Road is just nearby. Then you will ask, hey, I would rather buy a property in Mid Valley or stay there. But of course, the price there is already sky high lah. Very expensive also. And the rental there is also very expensive. Like Mid Valley, you get a 3-beders, you need like 5,000 to 6,000 ringgit to rent a unit over there. Okay, so people who cannot afford 5,000 to 6,000 monthly rental, they'll move slightly further away, but still very near to the working place. So this is the concept. And then of course, people from Petaling, from Subang, from Puchong, from all this area where also have a lot of shop malls and a lot of offices over there, they will want to stay in Oak Lang Road. Like myself, I have a lot of agents who are staying in Oak Lang Road right now because of convenience. And this project, which we'll talk about later, is a mixed development, meaning it have a supermarket below, you have offices below. So if you compare the rental between these two projects, KL Gateway and Southfield, which is next to each other in the same area, why the monthly rental is they are different. Okay, both 2 rooms, one can rent 2,002, one can rent 3,000. Why? Because KL Gateway is a mixed development. It has a shopping center below the unit. itself. That's why it can fetch a higher rental rate. Okay. One is a mixed development, one is a residential. Of course, now imagine now, you are in a movement control order right now. You cannot go anywhere. Okay, you cannot drive your car. Imagine you are staying on top of a shopping center or a supermarket. Isn't that a lot more convenient? You want to buy fruits, you want to buy anything, you just walk down and then you can buy. Okay, that is convenience. That's why rental will be a lot better if you have convenience stores in the building itself, or you have a big shopping mall below. That's why like Tropicana City Mall, Mid Valley, Pavilion, even in Oakland Road at Pearl Surya, the price is actually, the rental price is really very good, and also the capital appreciation is there. This is a common human nature, okay? You want to shop, and you want your convenience store very nearby, okay? And for this project, you have dining experience, convenience also. There are a lot of restaurants which will show you below the residential units. And these are the actual, the 3D design. Okay, and for rental market, you have the students market. So Design Academy, okay, is an art college similar to the One Academy, is going to move into Miller Square, which is in Oakland Road. And then they will have, now they have 2,000 students. They're going to increase it to 5,000 to 6,000 students. Okay, so if you have art college staying there, is it easier for you to rent out your unit? Okay, the demand for your unit will be a lot higher because you're a student market. Just like property in Sunway, it's very easy to rent out. Property near Taylor's College is very easy to rent out. Okay, and here we have a college. Okay, design new campus at Miller Square by Exim Group. So this one is in the internet. You can actually find out yourself. And on top of that, okay, Exim headquarters is going to move to Miller Square. Okay, the top 3 stories will be owned by Exim itself. So the entire HQ will move there. And on top of that, I'm from IQI. Our office is going to move there as well. So we have already purchased 3 stories of office block in Miller Square itself. So, and of course, we have 3,000 local agents right now. If you invest one property in Miller's, these 3,000 agents can be your potential tenant. They can also rent from you. A lot of our agents are actually staying in that area because our office is nearby. Okay. And this is the signing ceremony. We actually purchased 3 stories from Exim. All right. So next, we'll go into the product itself. So we've been talking about locations, okay, the rental market. Now we talk about the product itself, which is very important. Okay. Nowadays, if you want to rent out your unit, it has to be with lifestyle facilities. Okay, I'll show you what do I mean by lifestyle facilities. Okay, so this is a project. Now, by the way, if you go to Oakland Road, you can see it already. It's more than 20-story high. Okay, we have the Tower A and Tower B on the left-hand side. That's a phase 1 for service residents. We have Tower C and Tower E, which is a phase 2 service residents. And then we have an office tower, Grade A office tower, which Exim and IQI and also a lot of the Exim associates are going to move in there. So they are going to be like law firm, architectural firm, town planning firm, and all these professionals. They're going to move their office into this tower. And below, there are 4 levels of retail lots for commercial investor. By the way, it's already fully sold already. And all these supermarkets and all these convenience stores and like saloon, they're going to move in there. And for Tower A and B, it's partial furnished. C and E is actually fully furnished. And this is the 8th floor plan. So on the 8th floor, there are also retail lot. Okay, there are, I think, 8 units of retail lot for dining. So they already plan what kind of restaurants to put in there. There'll be Korean restaurants, Japanese restaurants, Italian restaurants, all already allocated. So imagine yourself staying up there. You just take your lift down here and then you'll be able to eat in the restaurants. And Exim Future Sales Gallery is going to be in the middle. So we have 2,000 to 3,000 agents right now. These are all your potential tenants. And the retail is a self-sustainable business, okay? Because many people are actually working there. So you don't have to worry, okay? You don't have to worry that the retail lot or the supermarket and all this will be run down and nobody is renting and become a dead town. Why? Because it's a self-sustainable city. Exim office is going to be there, IQI office is going to be there, and all these associates are going to be there. A college is going to be there. So all these people will actually spend their money within the building itself. So it becomes a self-sustainable business. And some of you might ask, hey, what about Scott Garden? You see very run down. Scott Garden is very run down because all is sold by individual owners. The boss is not there. The management is no good. But Exim, their headquarters is over there. Do you think you dump rubbish in your own house? Or you take care of your own house very, very well? So the boss is over there. Of course, you take care of the building very, very well. So this is something that we don't have to worry about. Okay. How build up how many units? Okay, I'll answer that questions. One tower is about 300 units. Okay, this is the scale model. So tower on the bottom is tower A, B, and there's a 40-meter swimming pool over here. And this is Exim Sales Gallery. This is all the retail lot. Okay. And all residential towers have their own swimming pools. Okay. And state-of-the-art facilities. Let me show you. This is the 3D drawings for the building itself. So you might ask, hey, 3D only, then later come out, not like this, how? I'll show you some of their existing projects. You compare the 3D and the actual unit itself, whether you can see any difference. Later I'll show you. Okay, so this is the facade. You can see the facade already for Tower B and Tower A. This is the gourmet kitchen. The good thing about Exim projects, which I like a lot, is that they have a lot of facilities. Okay, and which later I'll show you. Their previous projects. I like to have party over there. For example, I like to bring my friends and my team to have party in Exim buildings. Because why? They have a karaoke room, they have a games room, and if I want to bring them to Red Box, let's say, to sing karaoke, I need to spend at least like for 30 people, I need to spend like 3,000 ringgit. But here, I need to pay like rental only 200 ringgit. I buy KFC 1,000 ringgit. So I spend 1,000 ringgit comparing to 3,000 ringgit, and I have fun. Okay, so these are the sport lounge, okay, the herb gardens, the urban garden, the barbecue area. Okay, and this is a facade. This is Tower C, grand lobby. Okay, this is the facade, and this is Tower E, grand lobby. So this design is like they use a red bricks so that it has a sawmill feel. That's why it's called Miller's sawmill. Okay, because that piece of land used to be a sawmill or factories. And then this is an infinity swimming pool for Tower E. All the towers, the residential towers, have infinity swimming pool except Tower A. Tower A is on the 8th floor. Right, the 40-meter swimming pool that you saw just now. And like I said just now, why mixed development is so important. Let me show you some real-life example of mixed development. This is Publica. Okay, Publica is in Mont Kiara. So when they launched, 2005, it's like 400 to 500 ringgit per square feet. Now it's more than 1,000 ringgit per square feet. Why? Because of mixed development. There's a shopping center below. Above is residential unit. By the way, Publica is the first condominium or first residential unit to break 1,000 ringgit per square feet threshold in Mont Kiara. This is Tropicana City Mall. When they launched, 300 to 400 ringgit per square feet. Okay, now 900 to 1,000. Also mixed development. This is in PJ. Empire City, when they launched, very cheap only. Now 800 to 900 ringgit per square feet. Also because of mixed development. Okay, why is it so convenient, or why do you need to invest in mixed development? Because in the old days, if you stay in one area, you want to go to buy something, you need to drive your car like 20-30 minutes to a supermarket to buy something. Now we take this out, we combine these two together. Convenience, economy value, living value. So it becomes a self-sustainable unit. Now, mixed development actually evolved. The first generation is you combine residential with commercial. Then we put in another thing, we put in offices. Why? Offices, daytime, okay, they will spend in the commercial retail lots. Okay, people need to eat, people need to buy things. So more people will be there. Then we put in another thing, we put in education, okay, for the rental income. So this is the evolution of mixed development. And this does not happen only in Malaysia, it actually happen in other countries as well. For example, this man is used to be the richest man in China called Wang Jianling. So he built a mixed development which is super huge in China called Wan Da Mao. Okay, if you've been to China, this is a place that you need to go. It's crazily big at the shopping center. It's an entire mixed development. So they also evolve, okay, from first generation, second generation, third generation, and now fourth generation. Why? Because they also see the value in a mixed development. Okay, now we talk about the developer. Okay, you need to choose good developer, because a lot of my customers last time, they buy units from the less well-known developer and not so good developer. Now they are having a big headache. The unit cannot rent out, run down. Some development even cannot VP. Okay, when they're VP, the lift cannot work, the lights cannot work. So choosing the right developer is utterly important. Okay, so let me show you some of the past project that Axim have done. Okay, this is called the lifts. This is actually an actual photo. Okay, an actual photo that I took using my handphone. You look at it, it's like 5-star hotel swimming pool. 5-star hotel swimming pool. 5-star hotel grand lobby. This is a lobby. They have a sunken area where you can sit. Now this is a place that I like a lot. You can actually sing karaoke with a Rick's box system. And of course, I like to have party over there. So this is a party that we had previously. And the second project is called the Leaves. This is in Kuchai Lama. I think if you've been to Kuchai Lama, you will have seen a very tall building over there. And this is the grand lobby. You look at the quality. This is a swimming pool on the rooftop. Okay, infinity swimming pool. And with a 360-degree gym on top. I also like to go there to swim. And this is during nighttime, very beautiful. And this is Twin Arcs in Bukit Jalil. This is also an actual photo. This is not 3D artist impression. This is actual photo. Okay. Look at the lobby. Look at the facilities. These are all actual photos taken by my own handphone. Okay. They have a sky gym. You know, from here, you can just look out and look into the golf course of Bukit Jalil. Yeah. And we also have karaoke session over there. We like to have karaoke session over there. And this Expressions, this is in Jalan Tun Razak. Okay. This is fully furnished unit. All these units are provided by the developer. This is also provided by the developer. Okay. And this is the most beautiful swimming pool in KL, I would say, in Expression, rooftop, 48th floor, overlooking KLCC and KL Tower. And I always swim there because I used to stay there. And during a night time, you go over there, there are a lot of bikini girls in the swimming pool. So for the guys, you might want to visit this place. And this is the lounge. So let me show you some of the completed projects. So this is the Rains. And this is a comparison between the artist impression and the 3D. The artist impression and the actual photo. So on the right-hand side, on the top is actually the artist impression, meaning the 3D drawings produced before the project was built. The bottom one is actually the actual photo taken by iPhone. Okay. Can you tell the difference? Actually, I would say 90% similar. Some people even say the actual photo is nicer. I also agree. Yeah. So for most of the projects, I would say for all the projects, the 3D rendering and the actual photos are almost the same. So you don't have to worry that like some of the developers that show you very nice photos, and then when you get the product, it's actually not as nice. But for Exim, it's the same. Okay. So these are the past project, trees, leaf, twin arcs. And when we sold the trees, it was 400 over per square feet. Now it's selling 800. The leaf is, I think, 700 right now, 400 to 650. And twin arcs is selling at 900. And a lot of people are actually wanting to buy a twin arcs. Big units, nice golf course view. I mean sub-sale. This is sub-sale value. Okay. So why choosing a right developer is very important. Because you want to avoid property owners like me. Let me show you some of the photos of other developers when they hand over the properties. This is even before they hand over the properties. This one, in Daman Desa, okay? They are selling below market value, but you know what happened? The structure actually collapsed. This happened just like 2 months ago or 1 month ago. And this one, in Sri Petaling, last year also collapsed. And this one, I don't want to say which developer in this project in Kepong. You look at the ceiling, you look at the car park, you look at the corridor, all damaged. Imagine yourself, you are the owner of this unit. How much headache are you going to have? Yeah, when you come back home, you see something like this. You look at the ceiling, you look at the quality of work. Okay, so I would say, yeah, there are a lot of very, very low price project out there that seems very fancy and attractive. But my experience over the past 10 years is that if you want to buy something of good value, is never very, very cheap. Okay, the price has to be reasonable. Okay, so let's look at the price and package up for Millers. Okay, so let's compare our neighbors. So this is Mid Valley selling at 1,002 right now. This is Federal Highway. Bangsa South is selling about 1,000. Okay, some of the units now is selling at 900 per square feet. This is Old Klang Road to Subang Jaya and to PJ, to Daman Desa, to Old Kuchai Lama. Nine Sepute is selling at 850 per square feet. It used to sell at 850 per square feet when they launched the project. South Bank, 750 per square feet. Okay, it's bare unit, no furniture is given, no rebate. You have to pay 10% down payment. Avantas is selling at 800 per square feet. Scott Garden, 700 per square feet. Verve Suites, okay, this is next to Millers, is selling at 1,100 per square feet, one of the most expensive unit in Old Klang Road, but one of the towers is actually fully sold already. And the rental is actually pretty good in both streets. Per Surya is selling at 800 per square feet. It's a mixed development. And Millers is over here. And how much is Millers selling? You have a look. Okay. So this is the actual superimposed photo. Okay, so we have a few types. Tower A and Tower B, we have 3 bedrooms and also 2 bedrooms. So this is the 2-bedroom unit, 3-bedroom unit. Okay, so if you look at the layout, it's actually very practical. Okay, so on the bottom is the main entrance, and then you have the kitchen over here. For this unit is partially finished, meaning the kitchen cabinets, okay, the fridge, and the oven, the filter, yeah, they will be given. And then the washing machine and the drying machine will be given also. Okay, the dining table is not given, just the kitchen cabinets and all the air cons in the unit. So it's actually very easy to put the furniture because it's rectangular in size. Exim Architect actually put a lot of thoughts into designing the unit so that it's optimized the space. I have seen some of the condos out there. the space is very not convenient. It's like triangular in size or rounded wall in size. So it's very difficult to put furniture. But this kind of design is actually very practical. 3 bedrooms, 2 bathrooms, okay, very suitable for own stay. Okay, I myself actually I bought 2 units. Okay, in case I want to stay in the future. So very practical unit. And you want to rent it out, this kind of unit is also very easy to rent out. All right. So okay, let's look at a sample calculation now. So one of this unit, okay, I took a 25th floor, is SPA price is about 800,000. You have a 12% rebate. Okay, so do not send this out because rebate is not allowed. But just to demonstrate lah. Okay. So meaning your down payment is 0. Okay, if you get 90% loan, you actually don't have to pay anything to own this unit. Okay, and if you get a loan, is 90% loan, you are paying 3,200 a month. So look at this, 3-bedroom unit in PJ and in Oakland Road and Mid Valley right now. If you want to stay there, you have to pay like 4,000 ringgit, 5,000 ringgit rental to stay in a 3-bedroom unit. Okay, my staff, I have one staff who stay in PJ. They rented 1 room inside a landed house, cost about 1,000 ringgit. 1 room only, 1,000 ringgit. And then a lot of my agents actually stay in Jalan Puchong and Oakland Road. They also rented rooms. Okay, 1 room, 900 ringgit for those projects or property that are not so nice, that don't have lifestyle facilities. 900 ringgit per room. For the nicer one, it can go up to 1,500 ringgit per room. Okay, so imagine you yourself, you want to stay in a good locations, okay, with your wife and with your children, and you want to rent. Okay, maybe you pay 3,000 ringgit or 3,500 ringgit to rent a house. Why not own a unit yourself that belongs to you? You don't have to service other people's loan, and at the end of the day, you don't own anything. Okay, even for friends, like 3 bedrooms, 3 people can stay, it's still worthwhile to actually invest in 1 unit for own stay. Okay, and all the legal fees are absorbed, partially finished. Like I say, all the air cons are included, all the kitchen cabinets are included, and all the wardrobes in 2 of the rooms are included, the wardrobes. The water heater in the bathroom are also included. And on top of that, the glass, okay, the window glass panel provided exim are thicker, so more soundproof and with tinted, meaning UV, there's a UV protection for that. So this is good quality stuff. Okay, so this is Tower C unit, fully furnished, 2 bedrooms. Okay, and for Tower C, let me show you what they are going to give you in the fully furnished package. So what you see is what you get beside the loose item, meaning the pillows and this flower, they're not give you. But the console, the TV console, the TV, the curtain, they are giving you. Exim is giving you, and also the dining table. Okay, the kitchen cabinets included. So this is fully furnished package. This is for Tower C and Tower E. Okay, the beds, bed frame, mattress, even pillows, they're actually providing, and also the wardrobe. Okay, for this unit, you have a special package. Okay, what do I mean by a special package? Let me open up the chat. Okay, there is a GRR package for this. What do you mean by GRR? Means guarantee return package. Means if you buy this unit, you get 2 years GRR, 6%. And how much are you getting? If you are buying this unit, you get a loan and you are paying 3,450 per month if you get a 90% loan. But Exim has a GR package, they are giving you 4,000 ringgit, which is 6%, okay, for this unit. So you see you're actually getting a good cash flow over here. You have almost 600 ringgit cash flow for this unit. So 2 years guaranteed. After that, you can actually continue to rent to Exim. or you can take it back yourself. But of course, subject to negotiation, okay? Subject to negotiation 2 years later. But actually, I think this is good because even if you buy a project without GRR, you also need a time to actually find a tenant, you need to engage agents, you need to pay your 1 month commissions and all this. But this one, straight away, okay, you already rented out, you consider your unit rented out for the 2 years, okay? No hassle. So this is a GR package. So GR for 2 years for Tower C. And with a non-GR package, your rebate will be slightly more. Okay, just now was 9%. Now for the non-GR is 13%, meaning you don't have GR, you have to find your own tenant. And this is 0 down payment. Okay, meaning you don't have to, if you get 90% loan, it's 0. Remember what I say about OPM? Okay, don't spend too much cash on property right now. Okay, make use of other people's money. Some people argue with me that, oh, I want to buy sub-sale, I want to buy landed. But you know, when you buy from sub-sale, there's no rebate, you need to pay 10%. If you buy a decent condo, 700,000, you need to come out with 70,000 cash upfront. And on top of that, you need to pay all the legal fees, which cost you about 20, 30,000 already. That's 100,000. And then on top of that, you need to buy furnitures. You need to furnish the unit. That's got about 50, 60,000. So you need to take out 160,000 cash to stay in one unit or to buy one unit. Okay, 160,000. But for new project, because of the legal fees are absorbed, okay, the stamp duty for the loan is absorbed, the furniture partially furnished is about 70%. All the expensive items are already given to you. So you don't have to buy a lot of furnitures. And on top of that, you don't have to pay the down payment. You get a 90% loan. Meaning you save 160,000. Okay, comparing you buy sub-sales and buy projects. Okay, so this 160,000 you can actually invest into the share market right now, which will give you a good return. So that's the concept right now in 2020. Cash, you go and buy share. Loan, you go and buy property. Then you have 2 portfolios on hand. Yeah. Okay. So this is fully furnished also in this is Tower E. Okay, Tower E, 2 bedrooms and 2 bathrooms, 680 square feet. You look at this layout, it's also very practical, you know. Actually, my friends bought this unit for own stay. So he's a lady, don't have kids yet, so we buy this unit for own stay. Very rectangular in size, and the bedrooms are of decent size, and the bathroom is also of decent size. And on top of that, she saved a lot of money. Okay, I used to buy one sub-sale unit, empty unit. I bought at 500,000 in Sri Kemangan. I spent 60,000, 60,000 to furnish the unit. 60,000, and then on top of that, I pay the down payment like 50,000. So for 500,000 unit, I actually spent 110,000 to buy one unit. But this one, I also purchased. I didn't come out with any money because I got 90% loan using my sister name. So I don't come out with any money. So the money I can put in wherever I want, especially now, you can put it into the share market. Okay, so this is Tower C calculation, also 11% rebate, meaning you still get back 1%, and your monthly investment is only 2,008. 2 bedroom in that area, in the future, you can rent 2,005, okay, to 3,000. Worth Street, 2 bedrooms is renting at 2,005 right now. Okay, the day I just went to look at some of the units with some of the agents. And then Bukit Jalil Link 2, the 2 to 3 bedrooms unit are also renting 2,005 to 2,008. And you know, they don't have lifestyle facilities. Okay, they don't have supermarket. Link 2 have supermarket below, but the facilities and the condition of the building is not very, very nice compared to Miller's. Okay, still yet, okay, they are renting at 2,008. So imagine this one, how much you can rent out in the future. Okay, so this is a photo. about leveraging, okay? So of course, nowadays, you need to know how to leverage to maximize your profit using the least energy, least amount of energy, or least amount of cash, okay? And buying into projects and properties in good location with good facilities is the way to go, okay, to leverage maximum. Be it whether you want to go for investment, okay, buying for investment, or you want to buy for own stay, both also okay. And I would really, for myself, I would like to stay over there, okay? I would like to stay over there. So I buy a unit, okay, most likely I'll stay in that area. So for all of you thinking of or people who are getting married or want to move out, okay, so investing in one of the units is actually very reasonable. Okay, so let's look at this this chart again. I mean, these figures again. Imagine 800,000 right now, and 10 years later, you have 50% gain, you make 400,000, 500,000, 500% ROI, return on investment. That's, I assume you pay 10% down, 80,000. Right now, it's zero. Zero. You don't have to pay anything. The return on investment will be very, very high. If 10 years later, you just sell it and for a profit of 200,000-300,000, you're making good money. So let me ask you this question again. If you have 80,000, you want to put in FD, or you want to put in property to get a 50% return, okay? Now, even if you don't have 80,000, you still can buy, as long as your income, okay, can sustain the loan. I always ask my client these questions. If this 3,000 ringgit repayment, okay, if you cannot rent out, okay, touch wood, you cannot rent out, will this 3,000 ringgit kills you? Meaning you don't have money to buy milk for your children anymore. You don't have money to buy food for yourself anymore. If that is the case, okay, do not invest. Do not invest. Save all your money. But you say, okay, 3,000, touch wood, if I cannot rent out, I still have money for my own expense, my expenses, then it's okay. By all means, go ahead and invest. Because at the end of the day, people with property will win in the long run, definitely. Some of my friends who purchased properties 10 years ago, they are making good return right now. They sell the properties that make like 400,000 profit. There's one property in Puchong called the Zest Residence. My friend bought, sold, make 400,000 profit. Imagine to save 400,000 cash in your pocket, okay, by working. It's actually very difficult. But by leveraging on bank and property, you can actually make 400,000, okay, cash in 5 to 10 years time. Okay, so this is an extra money for you. Why so many rich people become richer and richer? Because they invest into properties. Most of the business owners out there who become very, very rich, somehow or rather, they are involved in properties. Okay, somehow or rather, they bought some properties. And then over the long run, they will win. Okay, and for today, online booking, okay, whoever bring you here, you just need to pay 100 ringgit. Okay, 100 ringgit booking fees, and then you can send your IC and then sign the booking form over through the mobile phone. Okay, you don't have to meet up because now stay at home, don't go out. So Q&A. Any questions regarding whatever I have presented just now? Okay, is it clear on everything? If it's clear, give me a 5. If you have learned something today through my sharing, can you give me a 5? Okay, I saw one question just now. With recession coming in, is it still encourage property? Yes. Why? Because property is a necessity. Okay, be it recession or economic crisis, you still need a place to stay. Okay, you still need a house to stay. And for this, okay, be it investment or be it for your own stay, if you buy it Okay, in the future, you can actually stay in it, or you can rent it out, or you can pass it to your children. What's the title of this project? It's called Miller's Square. Miller's Square, let me type it out. This is a freehold project, okay, commercial title with HDA, okay. What do you mean by commercial title with HDA? Meaning is governed by the HDA Act, meaning you can get a 90% loan, and the electricity will be on residential rate because it's for residential use, okay. So, okay, some projects they are residential title, some they are commercial title, but most project in good location right now is commercial title with HDA. So you can treat it as the same. Yeah, because the most important part is electricity, but electricity is actually the residential rate. Right, 0.38 is a maintenance fee plus sinking fund. Which block is more potential? Actually, it depends what you want from it. Okay, if you want 3 bedrooms for own stay, or even for investment, then it's Tower A and Tower B. But if you want rental, I would say Tower C and E are okay. Rental. And if you want GRR, that's Tower C. Okay, you have 1 bedroom and so 2 bedrooms. Okay, the price you can actually check with your consultant that brought you here, that invited you here. They can actually share you the share price. Completion date is 1 more year, right? Next year, end of next year. Yeah, completion date is Q1 2022. Average price depends on whether you are buying 1 bedroom, 2 bedroom, or 3 bedrooms. But it's about 800 ringgit per square feet. 800 to 850 per square feet, which is a good price right now because your neighbor is selling 1,000. We are about 65 to 70% sold already. Yeah, 65, but we still have some good units available. So for those who do not know who is your consultant that serve you, you can actually text here. Someone will attend to you. And of course, you want to make a booking, go back to your own consultant. Total units so far. So when was this launched? It was launched, let's see, 2 years ago. Officially launched 1.5 years ago. Yes, any more questions? You can ask questions on the share market also. Public bank appreciated by 25% for the past 2 weeks. Okay. So, like I say, what stock you bought? Yeah, public bank, public bank. But for those who are interested, really, I think these are very good opportunities. And right now, even if you get a loan, you don't have to pay first. You have 6 months moratorium period. Banks are still approving on the loan. Even now, you can sign the SPA through Zoom. Okay, you can sign SPA. If loan not approved, the deposit of 100 ringgit will be treated as admin fees, 100 ringgit admin fees to process the documentation. It used to be 500, okay? If loan not approved, there's a 500 ringgit admin charges, but now it's only 100 ringgit because of the COVID virus. So this is a very good deal. 50. If this is the, yes, you have to pay 20% down payment because of course, it's not 20%. depends on the rebate. If the rebate is 11%, then you are paying how much? 19. Okay, it will be very easy to rent out, to be honest to you. Why? Because there are no such beautiful projects in Oakland Road at this moment of time. Sky facilities, sky swimming pools, and all this. For tenant nowadays, they would like to have something of lifestyle. Okay, for example, let me give you an example. Pattus, also by Exim, which is just down the road. Is 95% tenanted. Okay, because of nice facilities. Total units, one tower about 300 units. Total unit is 1,600 units. Yes, commercial title with HDA. Meaning you can get 90% loan and it's protected by the Housing Development Act. Meaning it's progressive billing. Progressive billing. You don't have to pay in one lump sum the whole SPA amount. Okay, any more questions? Okay, if don't have questions, let me repeat this again. Every cloud has a silver lining. Okay, every crisis lies an opportunity. So stay at home, stay safe, and for those who want to make a booking, go to your agent, go to your consultant that brought you here. And thank you very much. I hope you have learned something today, and stay safe and be healthy. Thank you. Bye-bye.